Hi guys, it's Ina, and today we will talk about precious metals. And I want to pay special attention today to gold and silver. A few weeks ago, I made a video where I shared all the tools I am using, and we saw bullish bias in gold. But I told that we have to see a breakup above this trend line going down here in order to consider longs in this market. We saw that breakup, but last week I got a lot of questions from my market research subscribers why I'm not given signal to go long in gold. So today we'll explain why I still have doubts regarding future of gold and silver. So first of all, you know that gold follows flagging patterns very well, and you can see it here. We had multiple flagging patterns. They are a bit different, and it's when I'm saying flagging pattern, it doesn't mean classic book flag pattern because nothing is perfect in trading, and sometimes you have to use your imagination in order to identify some of the patterns. So anyway, you see that here we had three flagging patterns. It's a monthly chart and they played very well. Another two just small flagging patterns but also played very well. And this one, it was a complete failure. We had a trend line going down here, very similar to what we have right now. And this breakup was failed, and it was just a false breakup, and we saw a decline in this market. Basically, we had a bullish setup, but it's not that strong to push this market into multi-years uptrend. It may change, and especially taking into account all the fundamentals. You know that inflation worries in China are rising, and if that worry spread across the globe, we can see very good times for gold actually, and the qualified traders can make a lot of money in this market. But guys, it's all guessing. It's all what might happen. But we are traders, and we can't move this market. We have to wait for good setup in order to pick up a trade and make money here. So I know that it's so boring just to sit and to wait for something, but still, it's the best what we can do sometimes. And patience pays in this business. Believe me, I have over 12 years of experience, and this is number one rule for me, to be patient, because you need a good trend in order to make significant gains. All the other time you can have some losses, some profits, but nothing significant. So let's move on and let's have a look into smaller time frames, because short-term traders have to stick, in my opinion, for 4-hour chart. So it's a trend line, I think. So I will delete it. And we need moving average 50 and moving average 200. And what we see in 4-hour chart, that the price didn't touch moving average 200, and there is no rule it has to touch this range, but still till this range, and even a bit lower, till somewhat like 1800s hold, we will see a next wave to the upside with targets near 1930, 1930, somewhere here, and the next one is 1960. And that is the maximum target for short-term traders. I don't see higher than that. And still, it's only in the case if this support it's a bit higher than 1800s. But anyway, 1800s is a round number, so we want to stick to that. You can see it offered a support here, and previously this range was a massive resistance. So it depends on the strength of current uptrend, because on 4-hour chart we certainly have an uptrend. And if this trend is strong enough, we can see a bottom actually is already in, and we will see further rise to mentioned levels. Other than that, we can see retest of 200 moving average and potentially a bit lower, somewhat like here around 1815 or something like that. But this trend is still valid and this pattern is still valid till this previous resistance near 1800 hold. If this breaks, it will be a complete trend change. So in order to trade this pattern, you have to work with small lots if you trade spot, or a small number of contracts if you are a futures trader, for example. And I don't think anything else to add here in terms of 4-hour chart. I believe that this is it. It was a sharp reversal, almost like a V reversal, but still I would like to see somewhat more price action, and here's why. We touched an important range, which is near 1856. It was previously tested and gave support here. So there is no surprise. We saw a bounce to the upside and almost immediate bounce. And the key question is if this rise can sustain or not. So that's why I'm not in a hurry to take any trades in this market. But overall, as for now, and based on this price action, we can expect and we can look for potential entries to go long, at least for now. And now let's have a look into silver, because it has a bit different picture. And I am talking about monthly chart. Because in most cases, to be honest, I like to trade long-term and middle-term in silver. I don't like short-term trading and even scalping in this market. And as you can see, it followed flagging formations not so good as gold, for example. We had a 3 flagging formation that played very well, and we have 3 failures here. So another flagging formation right now, and the key question is, will it break to the upside or to the downside? In case of upside breakup, we will see a 38.40. But I can't exclude the possibility of failure like we saw here. And this one here, it also was in 2012, is a different from what we saw in gold. And here's why. In fact, we didn't have a clear breakup here, unlike in gold. But what we saw here is a classic depreciation phases. You see, we had a flagging formation. See here? And this flagging formation was broken to the downside, and this is another phase of depreciation. We saw a sell-off after this breakdown, and then we saw a consolidation, and the trading range during that consolidation became tighter and tighter, and this is another sign of depreciation. And you know that in most cases we see another sell-off after this tight consolidation, and this is what happened. And usually it's the final phase of depreciation, and the next what we see is actually the opposite, and it's actually the appreciation phases. However, in terms of appreciation, we need to see a higher lows, a clear higher lows, which we don't see yet. Let's be honest, because of this false breakdown. So actually, it's somewhat more even mixed than gold, and that's why I am not in a hurry to trade this market and to go long in this market. In case it will play well in both cases, we can see a long-term rally in gold, for example, and this rally can last for a year or even 3 years. But it's still all under question, and a lot still depends on fundamentals, because we certainly have some risks in economies. But as for now, we have a positive dynamic of key economic indicators. I'm talking about unemployment, about consumer spendings, and so on. And even if we see some disturbing numbers, they are not able, at least as for now, to reverse the dynamic, the overall dynamic of economic indicators. So till those indicators and positive dynamic, the stock market is still not under significant risk. However, in terms of technical analysis, we certainly see that, for example, S&P 500 futures are getting very close to breakout point. And the key question, if we will see a breakout or not. Because once again, I got also many questions regarding S&P 500. And the guys were saying like it's a bullish breakout and very strong closing. In fact, it only seems like strong closing, and in fact, we didn't break out yet because we have to see a strong and clear price action above 42.50. Until that, we can't say it has broken to the upside. And still, we can see some kind of double top here, followed by a pullback in this market. But once again, similar to what we see in precious metals, this market has a very mixed signals in terms of tools I am using, like for S&P 500, it cycles, advanced decline line, insider accumulation, interest rates forecast, Fed fund forecast, and everything is too mixed. So at the moment, I don't have any bias in this market, and I'm just watching price action. And almost the same approach as I described for gold and silver, because we have to see one of two. We have to see clear price action and clear breakout confirmations, or we have to see a clear fundamental setup, bullish setup for breakout. Other than that, I don't see any good trades in this market. But what I can tell you for sure, it has been a long time since S&P 500 is consolidating, and it can't last forever. And I believe that the breakout is coming, but the key question is, will it be to the upside or to the downside? For the upside, I mentioned to you the level to watch, and to the downside, we have a clear channel to the upside. So we have to see a breakdown below this channel on a daily chart. It's actually a weekly chart, but anyway, and a breakdown below moving average 50 on daily chart, because moving average 50 has been such an important thing for S&P 500. You can see it on the daily chart. It supported this uptrend all the time. So it was tested and buyers came in, tested and buyers came in, and similar what we see right a week ago or 2 weeks ago. So guys, one of two. For the break to the upside, we need 42.50 and clear price action above that. Or for the break to the downside, we have to see a break below this channel and a break below moving average 50. Other than that, it's a mixed bag, and you can do only intraday trading with gun levels, for example, but nothing more. Because when all the tools are silent, it means that we are just trying to guess where this market will move. And I don't like to play guessing. I like to wait for a good and strong confirmation and then move on. This is it for this week. Thank you all for watching. If you like this video, feel free to share it, like it, and leave a comment below. Thank you all for watching once again. See you.